Hey, Foreclosure Fix family, and welcome to another episode of the Foreclosure Fix podcast. My name is DJ Olojo, and our goal here is to help 1 million homeowners successfully navigate foreclosure. Now, if that mission resonates with you, do me a favor, like, subscribe, and share our content with someone who you know it can benefit. Or better yet, check out our book, The Foreclosure Fix, 12 proven steps to beat the bank, escape foreclosure, and turn your property into a profitable asset. On today's episode, we are diving deep into what is going on in today's real estate market. So we are doing a market update episode to give you all, as homeowners and people who may be facing foreclosure, insights into what is really going on. We hear the term foreclosure. We know that the market is kind of tight. We know that credit card debt is at an all-time high, but what are the numbers saying? What's really going on? Not just what we feel, but what's really going on. And that's what we want to share with you all today. I am really grateful for Adam Data Solutions. They are a leading data provider who provides significant research on what is going on in the foreclosure market, the real estate market, and just general information that helps both business professionals and consumers alike. And that's where I'm getting a lot of this data from today. So big shout out to them. And I really appreciate kind of the work they do in that space. That being said, I want to kick it off with a quote from the CEO and president of Adam Data Solutions. He says, Q1 2024's foreclosure data reveals a market in transition with slight increases in filings and starts alongside a notable decrease in REO properties. While foreclosures remain relatively stable, we're closely monitoring these trends. Homeowners continue to hold significant equity, contributing to a persistently hot housing market. What does that mean? It basically means that if you're a homeowner facing foreclosure, you should and most likely are in a position where your loan payoff amount is less than the amount of equity you have in your home. So that puts you at a good position. And so that means that you have options as you move forward. If you want to sell your house, you should be able to make a profit, use those funds to start afresh and do something new. Or if you're looking to reorganize your debt, you may be able to refi and pull out some money to pay down debt. But it just means that you as a homeowner are in a good position the way the data looks as a whole in this market. And so let's dive deeper into exactly what is going on with the activity. Right? A total of 67,657 U.S. properties started the foreclosure process in Q1 2024. All right. There were 67,657 foreclosure filings in Q1 of 2024. Now, you may say that is a lot of filings, but this is actually up, right? 2% from the previous quarter, which would be Q4 of 2023. But this is actually down 4% from year over year. So in Q1 of 2023, there were actually more filings than they were in Q1 of 2024. So basically, that's telling us that we're actually trending downward if you look at the year over year trend. And that's actually a good sign. But just because you get a filing does not mean it's actually going to go all the way to the foreclosure process. And we'll see this more in the data as it plays out. But that's just the bank saying, hey, I'm serious about this. I'm actually going to have the attorney file the paperwork and start the foreclosure process. And as you know, if you've been listening to the podcast or if you are in tune with what we're doing, foreclosure timelines vary significantly by state. So this could be the start of a multi-year process for the bank and for you. So just keep in mind that when you get that filing, it does not mean that your house is sold back to the bank or something like that. It is just the start of the process, and you have options, you have time, but you need to make and take decisive action. All right. Nationwide, 1 in every 1,478 housing units had a foreclosure filing in Q1 of 2024. So basically, 1 in every approximately 1,500 homes had a foreclosure filing. So for those of you out there who are saying it is just me, no one else is going through what I'm going through. No, you can drive up and down the streets and there are people who are facing the same thing. I'm not saying that to appease you. I'm not saying that to coddle you. I'm not saying that to say you have no work to do. I'm just saying you're not alone and that there are other people who are also facing financial stress. And so do not be dismayed. There are options as you move forward. All right. So the states with the highest foreclosure rates were Delaware, where you have 1 in every 894 housing units with a foreclosure filing. New Jersey, where you had 1 in every 919 housing units. South Carolina, where you had 1 in every 929 housing units. Nevada, where you had 1 in 961 housing units, and Florida, where you have 1 in every 973 housing units. All right. So what does that mean for you if you're in those states? It means the same thing, y'all. You just need to take action. You need to do something. And so don't let the statistics or the data scare you or make you feel any type of way. What you really want to focus on is your individual specific situation. I provide these market statistics and data so you can have a holistic overview of what is going on across the country. But it always comes down to what is best for you. This is a local environment, a local situation. And so you need to decide what is best for you as you move forward. But this information, as it pertains to what's going on in the market, provides you with good context and provides you with good information to be able to make the best decision for you in real time. So what are the foreclosure trends as it pertains to what the lenders are doing? So when we look at the term REO, that means real estate owned. So that means the bank has taken back possession of that property. So what we see in Q1 of 2024, there were 10,052 homes that the bank took back through foreclosure, right? So that means that those houses went all the way through the foreclosure sale and they took them back as a REO property. And now most of those properties, the banks will probably get a real estate agent to put on the market and go from there. And that number is actually up 7% from Q4 of 2023, but it's down, right? 20% from a year ago. So again, what's that trend? We are trending down year over year, both in foreclosure starts and in the amount of REOs that the bank is taking back. And that leads back to that comment around the market being in transition. What is going on in the marketplace is that homeowners like you have a lot of equity in their homes. So instead of the bank taking the house, guess what? You all are doing things that put you in a better financial spot. You are taking decisive action, you're making moves, and you're dealing with your foreclosure situation, which is why we started this podcast, which is what we want you to do. And you're in a great financial position to do it because the market is in your favor. You should have more equity in your home than your loan balance. And if you don't, there's still options. So don't be dismayed, but just keep that in mind. We see a trend of the banks actually taking back less property. And so that is a very, very good sign for homeowners. All right. So in Q1 of 2024, the properties that were foreclosed, right, the average timeline or the process was 736 days. That is a long time. That is almost 2+ years, right? And so keep that in mind that the foreclosure process is a long time in most places. Now, it could be very short in your state, but that process could be a combination of numerous things. It could be the filing actually happens. You start communicating with your bank. There could be some mediations. There could be a judicial process in the state that you're in. And all those things take time. But what I will tell you, if you are facing foreclosure, time is not on your side. You may say, oh, I have 2 years to deal with this situation. You don't have 2 years to deal with the situation. You need to stop and deal with it right now. And the reason is because the longer you wait, the less options you have and the more fees you incur. And so if you are in a position where your house has significant amounts of equity, you stand to lose that equity if you decide to wait, because the bank are paying high-powered, expensive attorneys to fight your case. Number 2, you have interest and fees accruing. Number 3, the more time that passes, the more options that you lose. Basically, there are less things available to you. as you move down the pipeline. And in all honesty, the bank can get annoyed with you in that process and you stand to lose. Case in point, our company is working with a client in New York, and this person is delinquent, very delinquent, significant delinquent on their mortgage. And this has been a 1.5 to 2 year process already. And they have went back and forth trying to modify the loan with this person. But every time they agree on a modification, the person just goes ghost. They say nothing. And then 3-4 months later, they reappear as if the communication never stopped and say, oh, I'm looking for a modification. And so that process is frustrating to do it numerous times to the individual. And so the bank has finally said, we are not presenting any more modification options. We are going to move forward with foreclosure, and there's nothing that can be done besides a complete reinstatement or a payoff of the loan. And so what happened in that situation? The bank got fed up with the borrower's games, and now they are inflexible. They are only willing to do what is required of them by the law, which is take a reinstatement or the borrower pay off, or they're going to move forward with foreclosure. Now, that could have been avoided if that borrower was not paying games and they did what they said they were going to do. So you need to make sure that you are holding up your end of the bargain when you're facing foreclosure and you're communicating with the bank. All right. So if you said, hey, I'm in foreclosure, I have equity, what do I do? Right? How do I move forward? I think I want to sell my home. What is the best time to sell? And this information is applicable not just for folks facing foreclosure, but for everybody in general. What is the best time to sell? Round of applause, please. I said round of applause. I meant to say drum roll, please. The best time to sell your house is in May. May is the best time to sell your house. According to Adam Data, you see a 13.1% premium when you sell your house in May versus other months. And so that does not mean that May is the only time you can sell your house. You can sell your house 365 days a year. But if you want to see maybe the highest premium, look to May, followed by February, then by April, then by June, then by March, then by January, and so on and so forth. And so if you want the best premium, May is a great time. And we are actually recording this podcast in May, and May is a great time to sell your house to get the premium. We always know that the summer months provide great buyer's premium. I know everybody's trying to get into school districts before the school starts. People have a little bit more time because their kids are out of school so they can go check out houses. And so we know in general, the summer is a good time to sell homes. And so you want to keep that in mind if you are trying to get the highest value for your house as somebody who may be facing foreclosure, because those extra few thousands of dollars or that extra premium you get on the sale of your home could be the difference between you purchasing a new home or you renting an apartment or whatever else may be the case. And so you want to try to maximize your investment and get out the most you can from it. All right. So what else is going on the market outside of the statistics and things like that I see? There are about 4 different trends that I want to kind of highlight for you if you are looking at selling your home right now, or you're looking at doing renovations to your home. For those of you who may not know, I am a licensed realtor in the state of Georgia, and I'm also a licensed builder in the state of Georgia. And so I have insight from my day-to-day dealings on both the construction side and the real estate side. And so from that, what I am seeing are a couple different things that are concerning to me in this marketplace. And I want to highlight them for you because if you are facing foreclosure, you need to be mindful that time is of the essence. And if you waste your time, you may find yourself in a position where you lose your home and lose your equity. First thing, the real estate market in general is very, 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 very local. I want to reiterate that the real estate market is very, very local. People present high-level statistics and data all the time, just like I did here today, and they're helpful, but the market in your area is different than the market in someone else's area. And I'm talking about block by block, street by street, city by city. And so take this data, listen to it, interpret it, but also remember that your market has its own specific trends down to the neighborhood, down to the zip code. And so you need to get in tune with that. And you need to maybe talk with a realtor or a broker in your area who knows all those idiosyncrasies. But the biggest thing that I'm seeing in today's market is I am seeing indecisive buyers. Yes, I'm talking about indecisive buyers. On the last 4 deals that we have listed on the market, we have had indecisive buyers come through the property. I'm talking about buyers who go into the house, who are excited to purchase the house, who love the house, who make strong offers on the house. And then a few days later, after the excitement has worn off, they cancel the contract. They don't even start their due diligence process. They don't even spend any money and put up their earnest money. They basically get excited and say, hey, I really want to buy this house. Oh, I love this house. It checks all the boxes. They have their agent and the listing agent and the selling agent do a lot of work. They engage the closing attorney and things like that. And then they cancel the contract for whatever reason. Or they take it a step further and they actually start spending money. They put up their earnest money, they do a home inspection, and then they get really enamored on issues that are not issues. And what I mean by that, it may be a small thing in the inspection report. So maybe an outlet needs to be grounded, or maybe there is a crack in the wall that just needs to be mudded and painted and touched up. And they will get so fixated on these items and say, well, I don't want the house anymore because, we may have to repaint the house or something like that. And these people are trying to make mountains out of molehills. And it just shows that they really didn't want the house. That if you are worried because you may have to touch up the paint in the house, then you are not either ready to be a homeowner or you don't want the house. And so if you're facing foreclosure, what you want to keep in mind is that you do not want an indecisive buyer trying to buy your house. You want somebody who is confident, who knows exactly that this is the house for them and that is going to move forward with the transaction. Because if you only have a short amount of time between the foreclosure sale and the time frame of you selling your house, you don't want somebody to waste 2 or 3 weeks of your time and then say, hey, I don't want it, or hey, I can't get the financing and things like that. And you may say, DJ, what can we do to avoid that? Well, there's a couple things you can do. One, you can make sure that you're working with a real estate professional who can help you throughout the process. And they will be able to help determine if the person on the other end of the transaction is serious. Number 2, you want to make sure that your house has broad exposure when you are marketing. Number 3, you want to talk and get references from the buyer. And when I say the buyer, if it's a homeowner, how do you get references for them? Well, you want to talk to their lender. You want to make sure that their lender has them pre-qualified and that they are ready to go. And if it's an investor, you want to talk to that investor's closing attorney and maybe potential clients they work with. You want to be assured that once you sign your name on the dotted line, that it's going to get to closing. And obviously, there is no 100% assurances in life, but you can put yourself in a much better situation by doing just a tad bit more due diligence to make sure that you don't end up on the wrong side of the transaction. Number 2, other thing I'm seeing are quick appraisals and closings. If you are familiar with the real estate market in the last few years, you would have seen that sometimes it was taking a long time to get a real estate appraisal. I'm talking about 2 and 3 weeks sometimes. But I have seen that timeline shrink tremendously over the last 6 to 12 months. And so we can get appraisals back nowadays in less than a week, which is huge because I've seen contracts go and close within 2 weeks. And this is not a cash offer or things like that. This is with conventional financing. And so the market right now is seeing much shorter timelines for both due diligence, appraisal contingencies, and financing contingencies, which is really, really great for homeowners who want to move quickly. So you should anticipate maybe around a 30 or so day closing timeline for your property in most scenarios. And so that is really, really good because before it could have taken 45 or 60 days, not because of the lender, but just because of trying to get the appraisal back and all those contingencies that had to be cleared. And so these are really, really good signs in the market. The other sign I'm seeing on the construction side is that I'm actually seeing stabilizing labor costs. In the last few months, I've had numerous contractors call me and say, hey, let me know if you have any work for me, or hey, let me know if you have any projects coming up because my crew is a little bit slow and we have work, but if you have more projects, I'm able to give you better pricing or discount. And typically as a contractor, you can always get good pricing because you're doing more volume. But when your subcontractors are actually calling you, that's really a good sign that you can really get better pricing. And so I've seen that a lot lately. And, one guy actually told me recently, he said, I'd rather take a slow nickel than a fast dime. And so he basically was telling me that he'd rather take consistent work at a lower price than inconsistent work at a higher price. And so I'm seeing that across the market as it pertains to labor. Now, if you're using these big companies, you may not see this same trend, but you may not see them also increase. And what you'll also see them is probably running different promotions or specials. And so keep that in mind if you're looking to get your house painted, your house pressure washed, whatever maintenance things, look for specials and coupons that help you save discounts if you're using some of the larger companies. What I have found is that the larger companies kind of have a standard price list, which is more expensive because they're paying for marketing. They have their trucks on the road. They have to have different licenses and insurance, and they just are a bigger operation. But if you look at some of the smaller mom and pop shops who do the same thing, who have great contractors, who are licensed, who are insured, you can sometimes get better pricing. And so make sure you are shopping around for any type of contractor services you're looking for. I always recommend you get 3 quotes on any job you want to do. And so that way you have some perspective. And if you're not getting quotes that are favorable, make sure you try to get even more quotes. Last thing, high material costs. I am still seeing high material costs. Although lumber has trended down, I am still seeing that material cost is very, very high right now. And so when you're looking at quotes, don't just look at the labor side, also factor in the material side, because oftentimes, depending on what it is, materials are a much more expensive piece of the equation than the actual labor. And so just keep that in mind. Right now, material costs are still high. And so when you're factoring in your renovations or your projects or whatever work you want to do, keep that in mind. The other thing I want to tell you is that when you may receive a quote from a contractor and that quote seems high, have them break it out between materials and labor, because sometimes that'll show you that their labor cost is not really that high and it's actually the material cost. The other thing I'll say is that if you are selling your home to an investor and they're giving you a super high price for the renovation, have them break it out for you too, so you can get a better understanding. Because a lot of times people think that, to redo a bathroom is only going to cost you $5,000. Well, that may be the case sometimes if the plumbing is good and it's a newer home and they're just changing out the vanity, the toilet and things like that, and maybe putting new tile down on the floor. But that may not be the case if they have to do more extensive work. And so it's never really an apples to apples comparison unless you know what the labor cost is versus the material cost, and you have a specific scope of work so you can compare what one contractor is doing to the other contractor. And that is all I have for you today as it pertains to the May market update. Hopefully that information resonates with you and gives you some insights into what is going on in today's real estate market as of May 2024. So now this leads me to my favorite part of the podcast, which is our bow tie round. It's where you, our listeners, get to tie one on with your host, DJ Olojo. The B in bow tie round stands for my best advice for someone facing foreclosure. The O stands for one thing I am grateful for. And the W stands for my wildest or most interesting foreclosure related story. All right. My best advice for someone facing foreclosure is to move fast, right? Time is of the essence. Yes, time is of the essence. So move fast and don't get caught by the foreclosure train. Just because you see data that says you may have 700 plus days to do something, that is not the case in every location. And the more time you waste, the greater fee it costs you in some way, shape, or form, whether it's mental space, financial space, or both. All right. So make sure you take action quickly on your foreclosure situation. All right, the one thing I am grateful for, I am grateful for our legal system. Yes, it is imperfect. It is one of those things that can be a thorn in your side, but I am so happy that we do have laws and that we do have a democracy that works. And so it is so great to live in a country where you at least have a process in order to get a resolution to situations like foreclosure or disputes or things like that. And yes, it's imperfect, but I'm so grateful that we have a system that we can follow. And it is one of the beauties of living in this great country we call the United States of America. My wildest or most interesting foreclosure related story comes from a borrower who I have talked to in the state of Georgia. And this borrower is facing foreclosure. They are approximately 5 days away from being on the courthouse steps and their house being sold. And this borrower has equity in the property. They tried to do a modification with the bank. It didn't work out and all these different things. They don't want to do bankruptcy because they say they don't want their credit to be messed up because they're looking to potentially buy a car and a house in the future. And they really don't want to do that option. And they're hoping to get help from family members on what to do. And what I mean by hoping to get help, they're hoping to get money from family members to reinstate their mortgage and move forward. So I work with this person and I just basically did an analysis for them where I broke down what the options look like. So what happens if you stay versus what happens if you go? And they got the analysis. They were happy about it. And they said, okay, I want to sleep on this and figure out what is the best thing to do moving forward. This was over 3 weeks ago, y'all, and they still have not made a decision. And they are 5 days away from the foreclosure sale. Now, as more time has passed, their options are becoming limited. Their options are basically file bankruptcy or reinstate at this point. And so I give you this story not to make light of their situation, but just to show you how critical it is to move quickly. When you are facing foreclosure and you're just weeks away from the foreclosure sale, you need to take decisive action. This is not a time to lollygag and procrastinate and overthink. It's the time to take decisive action. You got information from a credible professional. You've had numerous days to sleep on it, and you still haven't made a decision. And that foreclosure sale date is not going to change. The bank is not pushing it back. It's not going to magically go away. And so if you wait to the last second, you leave yourself with only two options. Pay back what you owe in full or file bankruptcy. And those are not necessarily bad options, but the beauty of the Foreclosure Fix solution is that you want to have multiple options. You don't want just two options. You want a plethora of options. And the more time you have, the better you can explore other options that get you to a goal and get you to your desired state. Y'all, with that, that ends our podcast today. I'm so grateful for you all tuning in. I'm grateful for your comments. I'm grateful for your reviews. I'm grateful for you being a part of the Foreclosure Fix family. It means the world to me that you tune in week after week after week, and that this content is helping you in your real estate business, or as a homeowner who may be facing foreclosure, or as an investor who's looking to help those who may be facing foreclosure. I appreciate you all so much. Leave us a review. Let us know if you have any questions or other episodes or content you want us to provide. And again, as always, my name is DJ Olojo. I love you and God bless you. The views and opinions on this podcast are for informational purposes only and should not be construed as legal advice. If you have a specific legal question, we highly recommend you contact a qualified legal professional.